Hi everyone, this is Maya and this is my channel Beyond My Comfort. Today's the weekends, you know what that means. I will be going over all my trades for the week. If you're watching my previous videos, you know I blew my account this this week. I think I failed it on like Tuesday or Wednesday. And I'm saying that I don't know which day specifically because I didn't know at first. I still thought I had some leeway before I hit my drawdown, but apparently not. But I'll be going over the trades I took this week. I only took two since I started my new job. Both fell through. Um, and I'm not upset about it. The second one I took hit my stop and then hit my target. And then the first one that I took, I mistook my bias. Like I had the correct idea, but I had the correct idea, but I'll have to show you. I'll show you in a second. But yeah, we're gonna go over the trades I took this week, and then I'm gonna show you something else. I feel like I finally got a frame down of what I'm looking for when I'm trading. For the longest time, I just worked with two time frames. I worked with the 15-minute and the 5-minute because I didn't have the best understanding of how to interpret higher time bias. So like your daily, your weekly, your hourly, things like that. And I kind of just avoided it. And I realized that was really screwing me over um, a lot when it came to trading the markets. And now that I've kind of gone over it, I've done my research, I understand it, and I've been testing it out, back testing, just like determining like my bias for the week. I'm like, okay, wait, this makes a lot more sense. It's actually not that complicated. So I want to show you the new framework that I've built based on that information and get some feedback, get some input if you all can help me. Because now that I understand daily, I use daily bias. I'm struggling with structure when it comes down to using the 1 hour for like a point of interest and where I want to not target necessarily, but where I want to frame my entry point off of using the 1 hour. So yeah, after I show you my trades, go over, my mistakes, what I've learned, then we're gonna move on to that and we're gonna go from there. So yeah, let me bring up my charts and let's get started. Okay, so I have my chart up as you can see, and I know that I have a lot of things marked out, so I'm gonna try to explain it to the best of my capabilities. So here, right here, we have Tuesday. So the first trade I took this week was on a Tuesday. And this is the daily time frame. As you can see, from Monday and Friday, we have been bearish. And so, from my understanding, what I've been learning using the daily is just trying to figure out um, where price is trying to target. So, from last Friday, as we can see that the low of this candle right here closed below Thursday's candle. So we would expect price to keep trending downwards. And what we would expect from this is that to target imbalances or liquidity. So like swing lows in this case. So we see that over here from, what is this, Tuesday's candle. So we would expect price to target somewhere down here. So let me mark this level out. I'm going to mark here. So price is going to try to hit this blue line. So going back, here's Tuesday. As you can see, on Friday, price closed below Thursday's candle. And then Monday, okay, this is where I got confused. And if someone can help like explain this to me better, if I'm misinterpreting this, that would be very helpful. So What we can see from this is that price on Monday wicked down below Friday's candle and then closed back within range. So from this, since it's another bearish candle, I'm expecting price is still going to try to go lower and take out this swing low that down here from this blue line. But from my understanding, if price closes within range, then you want to kind of look for a reversal. But what I've noticed when I've been backtesting this is that when it's still, and when price looks to be going towards the same, like closes with the same bias, so bearish in this case, it tends to still go down and hit a certain level before reversing or correcting itself. So as we can see, so this is Monday. So I'm assuming that price is going to still target this low for Monday, or that swing low before reversing. So I'm going to mark out this level with the white line. So right here. Okay. Don't pay attention to this. This was for the next day. I'm going to delete that actually. Okay. So we're going to go down to the hour now. Okay. So here, this is Monday. And over here, you can see like my, my entry point for the week. So from the daily, my bias is bearish. Now, moving forward, as we continue on, I wait until the open basically for that trade. So let's move this along. So this is where I get confused with the hourly. So I waited for price to retest that area, which it does. And from here, we see that it retests that level. And we are now at New York Open. As you can see, price immediately swept both the swing low and previous day low, which is this white, defined by this white line and this blue line. So I dropped down to the 5-minute, and this is going to be a little messy because in understanding this, my logic was messy, and that's on me. But as you can see, I identified over here a high, swing high, and a swing low. Really should be up here, but within that, I found a fair value gap, which is over here. So this is where I was trying something new, and it clearly didn't work. I was trying to see if price, once it broke through both the swing low and the previous day low, if it would retest before going lower. And as you can see, it didn't really hold, but I was thinking that over here, it's kind of consolidating, and I thought it was going to price was going to move higher before moving lower. So my entry point was at the bottom of that fair value gap. So as you can see, as we move forward, up here is where I put in on the 5-minute my stop loss and my target down here. So as we can see, it holds there for a while before finally hitting my stop loss. And that, when looking back at the day, the correct interpretation I should have had of this is that once we hit both our previous day low as well as our swing low, price already took out liquidity that was resting there and was now going to reverse. And I should have been looking for my understanding, I should have been looking for longs after that happened. If I was looking for shorts, I should have looked for it to reach those levels. So that was my mistake. I realize that now. And that's my interpretation of it. If any of you have a different interpretation of how I should have taken that, let me know, because I want to show you, and I've retested this for my new understanding. And I'll show you that after I show you Wednesday's play. I think it was, Wednesday's play. So that was Tuesday. Let's go to Wednesday. So here's Tuesday. It's candle, and as you can see, like I said, it took out the swing low and closed back in. So now I would expect price to be ranging bullish and looking to take out either previous day high, which would be here, and eventually take out a swing high, which is up here. So right now we are just looking for the next day to take longs, because our bias is now bullish, and to take out previous day's high. So let's drop down to the hour. Okay, and let's keep moving. Okay, this is what ended up happening. Price took my stop loss before going on to hit both the previous day high, and it just kept trending up. I placed my trade way too early and in an area that looked to be consolidating, especially looking at it from the 1 hour. And this is where I was kind of messing with understanding CISD, or like abbreviated as change in state of delivery. And my interpretation of it failed me. That's all I'm going to say. It failed me. And the way in which I used it, I didn't use it properly. So I believed that we would not take out this area here. And I didn't have the best understanding of how, like, which one to use, where to place it. And that clearly failed. Like, my bias was correct. Everything else was correct. Just my usage when it came to understanding which placement of change in state of delivery or using order blocks and things like that for my entry was incorrect. So that ended up stopping me out down here. But clearly you can see that when New York open, price was ranging upwards. And if I feel like this day would have been a good day for a trade if placed in the right spot. But clearly I didn't have the best understanding, and that went against me. I don't think this was anything to do with like the play of the markets or anything like that. I just misinterpreted how to use it. So those were the two trades I took for the day. Ended up blowing my account last week. And yeah, that's what happened. Now, moving forward, I'm going to start using something different. And this is something I want to be consistent with, and what I've been kind of introducing from my other videos and what I said I would be doing moving forward. So now that I have an understanding of daily bias and connecting it to eventually find an entry point, I am basically using only 3 time frames. I'm using the daily time frame for bias. as I kind of showed you from the two trades that I took. And then moving down to the 1 hour, I'm using that for point of interest and basically trying to find areas that price is trying to target. So areas of liquidity, areas where there are imbalances like fair value gaps and things like that. And finding those on the 1 hour to build structure, and then dropping down to the 5 minute, which is the time frame I use for my entries, and looking for something there. And after failing my prop firm account, I basically just went back and studied a little bit more on bias, when to correctly use it, not as you saw that I did. And then how to use the 1 hour to build structure, or interpret structure, I should say, and find a point of interest that price is trying to target, and then aligning that to eventually find an entry. And that has made a lot of sense to me. I still feel like I need to backtest it a lot more before I could say that's going to work, but I feel like I finally grasped something that makes sense, like aligning everything from higher time frames to eventually finding possible entries. That's what makes sense to me. So yeah, I want to show you the same 2 days and how I feel it would play out if I used that interpretation. So we're going to do that. So we're going to start with Tuesday, but obviously on the daily, we're just going to start looking back Monday. So let's see, this is Monday. Okay. So like I said, price is trending downward, so we're looking bearish. And so if this right here is Monday, if this right here is Monday, I would expect that price is going to try to reach for a swing low, which is down here. So I'm going to mark out this level. And though we wicked Friday's candle and trended down, we close within that range. But since it's still a bearish candle, I'm still going to say that we're going to trend downwards. So I'm going to mark out that level right here. And that's what I'm looking for. So I'm looking for price to either target the previous day low and eventually target the swing low. So moving to the 1 hour now. Let's see, this is still Monday, so let's move forward. Okay. So before New York Open, if price hits either one of these levels or both, then I would be assuming that we're going to have a reversal and price be trending upwards. We're going to change to a bullish bias. So we're looking here. Okay, let's see what this gives us. Okay. So it is 6 a.m. here. I am going to mark this fair value gap, because I said that price likes to look to fill imbalances, which it did. Still trending downward. And I even could have gone at that time and look to see if I could find an entry on the 5 minute if it respected that. But I'm not really seeing anywhere that I can confirm price action. Yeah. Okay, so we retest that fair value gap. Okay. So we eventually get something at 9:10. And this is on the 5-minute. So I'm going to mark out this fair value gap. And then it also took out this change in state of direction here, I want to say. So I would expect that price wouldn't go above that level. We're going to say price won't go above that level. And then take and then I would want to reach for here and then maybe see if it continues to hit that swing, but we're going to just put it here for now. Yeah, there we go. So let's see how price reacts. Okay, not in yet. Okay, so it took that level. We didn't get in, which is fine. Oh, took us out. But that is one play, so that would have taken us out. But I want to see how price would have continued on. So it's now, so New York is now open, and though price took us out around here, since it did take that out, like I said, I would interpret that we are now bullish for our bias. And let's see what happens. So price respects that for value gap. Let's see if it keeps going. Wow. I think, what did I miss here? The higher time frame. Okay. So on the 5-minute, it did wick us out. And that's okay. My only question to that is taking entries too early. I feel like I keep getting wicked out. And I'm wondering if I should just wait right when New York opens. So if any of you have like any preferences, like do you look to find trades before New York open or just wait afterwards? Because I see a good setup too. On the 1 hour, like here, that one fair value gap we found. So as you can see, price respected that. And I could have found an entry here. So like if I did the same thing, place it above the swing high and then aim for this. If that would have, yeah. So that would have worked, but again, that's not what I ended up doing. So yeah, that's Tuesday. I want to show you this one more time for Wednesday and then end it there. So let me show you here. Okay, so now looking at Wednesday. This is Wednesday, Tuesday. So focusing on Tuesday beforehand. So we took out that swing low that we were aiming for. So this area. So we took that out and closed back in range. So my bias would now be bullish, and we'd be looking to fill in any imbalances or swing highs, which is all the way up here. So we would just be looking for longs. So looking to take out something up here I believe we have a tiny fair value gap that would have showed up here. So let me mark out that. So yeah. So that's where I would look for price to reach next. So going into Wednesday, which is here, let's go to the 1 hour. Okay, so we're on the 1 hour. So let's keep seeing how this plays out. Okay, we have our first fair value gap that shows up here. Let's keep going. Let's see what time it is. It's 8. Okay. So it's now 9. So we see that price retested into that fair value gap and continued to trend upwards and is looking to reach the fair value gap we found on the daily. So we have I want to say we have a change in state of delivery now. And I want to see now if we can find something on the 5-minute. Okay, so looks like it got retested. And then there's a small fair value gap here that appears. And then this strong bullish candle right here also causes a change in state of direction, if I'm using that correctly here. And price is respecting both those levels, so I wouldn't expect it to hit below that. So let's see. So here I would probably just use the low of that candle that made the fair value gap and do 2. Okay, so let's see what happens. And it works out. So that works out as planned. Oops. Okay, so yeah. So that's one play. So that's kind of the direction of how I want to start using higher time frame to find my entries. I want your opinion on what you think about that, because it's a little complicated and it still uses the same model to get in for my entries, just implementing higher time frame bias to help solidify the direction I go into and structure of the market, determining if I want to trade or not. It's still a little messy, but that's expected as this is still like something I'm trying to get used to. I want to hear your opinions on what you think, though. Like, if there's anything you suggest or anything you think could be corrected, let me know, because I would love the feedback on if this is something you've attempted or worked with. So yeah, that's it. These are my trades. So going into next week, I am going to backtest this a lot, very heavily. I think take a good week, maybe 2, away from testing out any more prop firm evaluations, but still log my trades. And of course, next week I will be showing you how it went um, through paper trading. And then, yeah, moving forward from there. So, any advice that you guys have would be great. I could even show you like daily journals because I feel like that would be more helpful in reflecting the things I did and getting consistent feedback if that's possible. So yeah, that's the approach we're going to take going forward. Yeah, so that's all I have for you today. I know this video was more slow in interpretation, but yeah, we're going to try journaling. We're going to do that and see how that goes because I feel like that's going to give me a better understanding of what I'm doing correctly, what I'm not doing correctly, following rules and all of that. So yeah, I think going forward that'll be very helpful. So yeah, I hope you all enjoyed this video. If you liked it and would like to see more content like this, please subscribe and leave a like down below. Also, leave a comment for how you felt about the video, about the trades that I took, anything that you would correct yourself or what you would do that has been beneficial. So yeah, I'd really appreciate that. I hope you have a good rest of your day and I will see you all tomorrow. Bye.